All right, let's talk markets. Last week was wild. Dollar dominance, yen surprises, and a pound that's behaving like it forgot its homework. But before we dive in, here's the big news. We crushed it in trading this past week. Over 8 successful trades netting more than 400 pips. That's the kind of week that makes all the hard work pay off. Now let's break it all down and gear up for what's coming next, because trust me, the action isn't slowing down. The dollar came out swinging, flexing like it's in a bodybuilding competition. Even though Treasury yields couldn't clear key resistance levels, investors are banking on the Fed keeping rates tighter for longer. No rush to cut rates, and guess what? That sentiment lit a fire under the dollar. The dollar index sitting pretty at a key resistance zone. But here's the kicker. Can it keep up this streak, or is it about to hit a wall? We'll find out soon enough. Speaking of comebacks, the yen said, "I'm not done yet." It rallied hard despite no intervention from Japan. Let's be honest, it needed the win after getting pummeled for weeks. Against the dollar, it's still shaky, but when paired with other currencies, it's putting up a fight. Traders are starting to wonder if this is the yen's moment to shine, or just a brief spark in the dark. And then there's the pound. Oh boy. Between weak GDP numbers and a rising unemployment rate, it's like the UK brought a knife to a gunfight. The Bank of England's dovish vibes aren't helping either. The result? The pound ended the week at the bottom of the currency leaderboard. Rough week for Team GBP. This week, all eyes are on the dollar index. It's sitting in a critical resistance zone. Think of it like the final boss in a video game. To break through, we need bond yields to rally or a major stock correction. If neither happens, the dollar might start losing steam. But if the greenback breaks higher, we could see it push toward 114. Big stakes here. The yen's rebound isn't just luck, it's tied to a shift in risk sentiment. Watch AUDJP closely. It broke below key support last week. And if it keeps sliding, we might see a bearish trend forming. Pair this with traders recalibrating their views on global risk, and the yen could stay in the spotlight. December rate cuts? Markets are about 60% sure. January? Not so much. Odds are below 20%. The Fed speeches this week will set the tone. Powell's already said there's no rush to cut rates, and other Fed officials are hinting at a slower approach. Keep an ear out for any surprises, because the market's expectations can flip in an instant. Now let's talk about us. Last week wasn't just about watching the markets, it was about taking action. And we delivered. Over 8 successful trades, generating more than 400 pips. That's not just numbers, it's proof that sticking to the plan works. Whether it was riding the dollar's momentum or catching opportunities in other pairs, we stayed sharp and reaped the rewards. This week, let's aim for even more. Quick technical note for my chart lovers out there. The dollar index is eyeing 107.92 as its next target if it can clear resistance. But failure to hold 105.44 support could trigger a pullback. Stock market bulls? You're not out of the woods yet. S&P 500 and Nasdaq are both showing island top patterns. If they hold above their 55-day EMA, we're good. But a break below, we're talking deeper corrections. And don't forget the 10-year yield, it's stuck under tough resistance around 4.45%. A breakout could fuel the dollar's rally. A pullback? Not so much. Bottom line, last week was a chess game, and this week's the next move. The dollar's dominance, yen's fight, and Fed's next steps are all in play. We're coming off a great week of trading. Let's keep the momentum going. Stay sharp, keep tracking, and remember, the markets don't care if you're ready, but you better be. Let's crush it this week. This is George, and I will see you in the next one.